Hey guys, Mike here. So definitely an interesting day in the market. And I do want to start by saying thank you guys for all your support on yesterday's video. Read all the comments. There was so many of them. There's no way I could respond back to all of them. And some of you actually did share your own story, and I really appreciate that as well. Definitely some inspiring stories and stuff. So I'm grateful for that always. All right, appreciate your support on that. And if you hadn't seen it, I'll put it at the end so you can see it. Now, obviously today, we thought we were going to have a V-shaped recovery. Here we go. And then we saw at the end of the day, but don't forget, what do we got tomorrow? We got CPI, right? So these stocks, a lot of stocks been under pressure. And there's some data I'm going to show you. To me, it's almost like shocking data, but it makes sense, right? And I always keep you updated on this. What's the two things that drive the market more than anything else? Liquidity and leverage, okay? Like margin debt and stuff, right? And so we got that update, and I'm going to show that to you, and it makes some of the stuff just makes total sense, and I'll show you a lot of where this leverage was going to, and you'll say, oh, that makes sense, because what are you seeing right now? I told you. When it comes to earnings, they don't matter until they do, and it doesn't even really matter what the companies report. When the market, decides it's going to sell off, and when you see a stock running up, what I'll tell you about that is like they better hang the moon, and even some of them may even hang the moon and still get beat down double digits, right? And then you'll see other stocks, they're going up 20, 30% today and yesterday on earnings. But I'm going to show you the difference in the charts, like what the difference is, like what's happening here, okay? And you see that shift. You've seen it, right? I asked you, what do you see in earnings? The earnings weren't even that horrible or anything, but they were getting dropped 20, 30, 40%, right? And then all of a sudden we take the turn, the earnings weren't even good at all, and they were getting rewarded by 20 or 30%, right? And so now we're in another shift, another phase right now. We'll see how long it lasts, and CPI can make the big difference. We'll have to see on that. But when it comes to liquidity, I told you guys I'd sit on a call talking about global liquidity, and I'm telling you, you can find like these kind of calls on those Twitter Spaces or whatever it's called now, and they're free. You can ask questions. You can hear from people all around the world on these calls. And I just listen to them while I'm sitting here doing work and stuff. Right, and so one of them was about global liquidity, and this chart came out of it. And understand that what they do with this right here, they take all like the major world banks, right? So they'll take U.S., Japan, China, U.K., and I think they've even added in Canada, New Zealand, Australia, and kind of like the same kind of liquidity chart I use just for America. And you can see right here, there's a big divergence right over in the 2023 area right there. And you can see normally these kind of go hand in hand. They go the same direction. Obviously, liquidity goes up, the market goes up. But global liquidity, and this makes sense, right? Especially after the Bank of Japan said what they said, there's a big divergence right now where liquidity is coming down and the market was still going up, right? And so you can see, usually when this happens, that there's, they usually kind of rectify this, right? How's it rectify? It pulls back and pulls down. Now, is that going to happen this time? We'll have to see. But I want to make you aware of it. And it makes sense. I mean, we all know what global banks are doing and everything else. And some of these other countries are in much worse shape than we are when it comes to their economy and stuff. So just kind of keep that in mind. The other one to look out for is, this is kind of a funny indicator, but soft landing news, right? Somebody track this. And you're hearing this a lot, right? All about the soft landing, right? And it's spiked so much now that usually when you see these kind of instances, it pretty much means there's not going to be a soft landing. And it goes back to, there's something called the magazine cover indicator, right? This happened to the dollar last year. It happened to the dollar the previous time. It went on these huge runs. And as soon as you see on Time Magazine or one of these major publications, oh, the dollar's going to the moon, blah, 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 that signifies the top. It's done it multiple times for the dollar, especially. It's no different than water cooler talk or the elevator talk. When you get in the elevator and all of a sudden you hear your coworkers who you've never heard before talk about buying this stock or buying that stock, and you're like, what? They never talk about this stuff. That's kind of the end of the run, right? So, I mean, you might have heard them in the elevator saying, buy Upstart, right? The other day. And so we'll get into that chart in just a minute. But again, what's run a lot of these stocks up? What's the second thing that runs the markets? Margin debt. Look at this increase. I was stunned when I pulled this up today. This right here, I mean, look at that going to June. Again, this right here obviously is a lagging indicator. But look at the pop-up. The pop-up from May to June was larger than the pop from all the way from January through May, okay? And I was kind of waiting on this to see if this would happen and stuff, because you usually get this. And it's almost above zero now, right? It's been a while, but it's almost above zero. And so we'll see if it can get above zero, if this momentum continues, people keep leveraging stuff. But that absolutely will drive market. And you can see this right here. The percentage change and stuff, I mean, that's just a huge pop compared to what we were getting in the first 5 months, okay? And, you look back at other times, you've seen this. The market absolutely has run higher, but this makes sense because you may be sitting there going, I don't understand the economy not looking that great. We have a shortage on labor, which is helping out, right? Keep unemployment low and all this other stuff. And these rates, why aren't they affecting everything? Because people use margin more than ever. And all of a sudden, coming up in June, boy, they really started using it, which leads you to believe, what was the market doing in July? It was popping. And I think I said last time I put this out there, because we were popping in June, as I reported this about May, that you might see a big increase, and that's exactly what happened. And where are they using this money at? And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. I really believe retail especially is using it in those retail stocks, the very popular stocks that were made famous in 2020, 2021. And here's what I'm talking about when I go through these charts real quick. I'm going to do a real run through this on what's been going on with these high beta stocks on their earnings and stuff like that. And when you look at this, you got SMCI today, it's a semiconductor stock, down 25% after earnings, okay? And, when you go over here, you got Roblox, boom, down 22% on earnings. Then you go over to Upstart, boy, down 38% on earnings, but this thing is absolutely just tanked. Over the last, 3 trading days now, it's down 54%. Please let us know in the comments if you bought above 40. Now, Datadog is another one. Reported yesterday, actually, boom, dumped down 22% after earnings. And if you look, it's leading up into earnings, down 30%, all right? Then you go over to Li Auto, not as bad, it's only down like 12%. And then we go over to Nikola, this is one of those other ones, 48% down. I mean, it's just unbelievable in 6 days' time, right? 48%. Fubo is another one, obviously had earnings, disaster, down 38%. And then we get the flip side, right? Here's Celsius. Boom, up 24% after earnings, as you can see right there. Go over to MRTX, this one right here, pharmaceutical, was up 35% after earnings. Go over to RPD, it's up around 25% after earnings. And so why would those stocks pop double digits and the other stocks drop, right, like they did? And it's not just their names or anything, but it's just what we talked about, right? Look what was going on before these earnings came out. It was crazy. Fubo up 256% in 91 days. And 91 days is going to be a very key number here, as you'll see. SMCI, massive, 228%, 96 days, right? Then you go over to Datadog. This one's not as bad, but still up 80% in 91 days. Then we go over to Upstart. Look at this one, the king, 485% in 91 days, almost 500%. But then you go to the ones that popped, and what'd you see there? They're going down or sideways, right? So they get rewarded finally. They make the turn, right? Celsius had a nice pop over here in the beginning of the year, but for 3 months, all it's done is consolidated. Boom. Really good earnings come out. Huge pop, gets rewarded, right? Because it hadn't ran up. Palantir, which I want to talk about in detail a little bit here, up 100%, right? Now all of a sudden it's down 25% in 8 days, and it didn't have bad earnings, right? It had double beat, raised its guidance, and actually gave the market what they usually like to hear is a share buyback program, right? And it's still down, okay? Why? Because this is a popular retail stock, right? This is one of those many. The retail loves it. And if you look at it, the real reason it's down more than anything else, look at the weekly chart. Where's the support? The only support you're going to see here between 1250 and 1350, because to the left, there's none. It ran straight up. We all remember that, right? That's why that, $15 to $20 area right there is so key. But when you look at this thing, obviously, we'll bring in the volume profile to the side. You can see that lets you know there's not that much support coming into this. And if we even zoom in right here, and you can see when you have 100% run up into that heavy supply area right above it and stuff, and it's going to be reporting earnings, and we're coming into seasonality that's weak and everything else. You can see it lost its 50 moving average today. Doesn't mean it can't bounce tomorrow, but again, it's got the 100 and 200 right down there. And when we look at this, the 100 is going to be right around that 1225 area. It'll move up probably around the 13 area. Just keep that in mind. And when we go in here, right there is really where your support's at. That's where it bounced right there in May when it came back down. And so if you're a real long-term investor of this stock, what you want to see it's some kind of consolidation like this. You want to see this thing build out support at lower levels, right? So when you do have a drop down, you can say, okay, that's where it's going to pick up right there. Boom, that's where the demand area is at. All right, so just keep that in mind, because you can bet there's probably going to be a lot of buyers sitting there between 1250, 1350, somewhere in that area if it does get down to that area. Now, when it comes to tomorrow, obviously CPI is going to be king, but also don't be surprised if there's some kind of pretty decent bounce tomorrow, because I'm going to run through these big mega caps, but just look at these stocks that are sitting at such pivotal areas for a bounce, right? I mean, you got Meta sitting right there, filling that gap right there on that ascending trend line's been on for quite a while, moving up. You got Netflix sitting right at its 50-day moving average. It bounced last time it hit it. It comes to NVIDIA, okay, they're sitting right there on its 50-day moving average. And these have a lot of weights in the market. Apple sitting right there on its 100-day moving average. So keep that in mind for a bounce. Now, BABA reports tomorrow. I understand it was green today, but you know, earnings is going to tell us a lot, because the economic data coming out of there has been horrible. And again, I say it's hard to even chart or trade these stocks, because you never know what China's going to do and what they do today. Came right out and said, okay, we're going to put some more restrictions in place. We're trying to ease up, you know, but now they're going to put more restrictions on apps and stuff like that, the mobile apps, which this is the kind of stuff that just drives people away, right? I mean, who wants to invest in a country you just don't know when they're going to step out and say, no, we got to go ahead and put more restrictions in place. And of course, what this is going to do, it's going to sit there and drive away most likely foreign investment, anybody trying to IPO there, anything like that. It just doesn't make any sense why they keep doing it. I don't understand it. If you do, let me know. But again, this goes on to say the new rule is also likely to affect foreign-based developers, which have been able to publish their apps easily through Apple's App Store without showing any documentation to the Chinese government. Now, what's the other thing that's not going to help them? We just talked about this yesterday. Here comes the White House. Now they're going to put restrictions in place as far as who can actually put foreign investment into China, especially when it comes to certain areas. And what they're trying to target is the tech area, specifically semiconductors and things of that nature, that would help them with their national defense or anything like that, AI, anything like that. So that's definitely not going to help China's situation at all. And it says the administration is expected to target active investments such as U.S. private equity, venture capital, and joint venture investments in China in semiconductors and microelectronics, quantum computing, and artificial intelligence. So that is not going to help any of these stocks, because it's not going to help China at all. We'll see how the market wants to digest that, but we'll see how the earnings go, right? Now, another thing to watch out for S&P, I'm just going to say this. I know CPI is tomorrow, and yeah, that's going to dictate a lot of stuff. But again, we failed to breach 4,500 on the S&P. You can see you failed once there on the 8th, and then once today. Okay, and then as the more you test this, the more failures you get. And again, this sold off a lot more than this. That, you know, it makes it harder to come across that. Just keep that in mind, especially if you get 4460 breached tomorrow if something does come up with CPI. So just keep that in mind as well. And then when you get out the 15-minute time frame, you just look at what's been going on in August. You can clearly see a downward channel, forming there and stuff. So, we'll see. It tried to do the breakout today, failed, went back into the channel. So we'll see if that continues, because I see some projections for higher CPI, some are not. Now, when it comes to earnings, the only one I can see, honestly, is BABA. The rest of them, there's a lot of earnings, but nothing that's going to absolutely do anything to the market whatsoever. And then, of course, the big one, CPI. Okay, so you have continuous jobless claims, a lot of data actually, core inflation month over month, year over year. Then you're going to have inflation rate month over month, inflation rate year over year. See how it says prior 3, and then now it's projecting 3.3. It's actually projecting to be higher. So we'll see on that, even though I think core is supposed to be projected to be lower. So we'll keep an eye on that. Then you'll have initial jobless claims as well. So plenty of data that can absolutely wreck the market tomorrow. But I guess one thing we see is volatility. But if head-on CPI comes in at expectations, even though it's supposed to be up, let's say it comes in below 3.3, core comes in less than it's supposed to, which it's been doing lately, then absolutely you can see it pop up, because the increase in oil and gas, that usually is not going to hit for quite a while. And so, and you got to remember the weights, everything holds and stuff. So I'm not going to be surprised. And again, no earnings to wreck anything either. And we've had this sell off. So usually, it wouldn't surprise me to see a short-term bounce tomorrow just for the day or whatever. But let me know what you think down in the comments and stuff. So we'll see. Again, if those stocks lose those moving averages and keep dropping below, then that can be a problem for the markets, and you continue to get more of a sell-off, right? It's projected. Some people are thinking it's going to be like anywhere from 8, 9, 10% total overall sell-off. It just ain't gonna be straight down when it's all said and done. So just keep that in mind. But with this market, you never know, right? It's just unbelievable how it's been doing and stuff. So, but none of us should be surprised. You know, we talked about it for weeks about the seasonality and the weakness, and we needed to have a pullback to these moving averages and things like that. So that's actually a good thing to see, to keep that in mind. So again, hope you got something out of it. Hit that like and subscribe button if you did. I really appreciate it. I'll see you tomorrow.